Internal Revenue Service Tax Tips, IRS Tax Tips, dated August 26, 2019. These tax tips can help new business owners find success. These are going to be some tax tips to consider when considering starting a new business. So this is some of the ordering of ideas that you want to consider in the process of starting a new business according to the Internal Revenue Service, the IRS. Starting a business can be very rewarding. It can also be a little overwhelming. From business plans to market strategies and even tax responsibilities, there are many things to consider. Here's what new business owners can do to help get off to a good start. We have our items here, and obviously I'll have the link below, and you can go to these links and go to the further links and get further information with regards to the IRS suggestions here. First item, choose a business structure. The form of business determines which income tax return a business taxpayer needs to file. The most common business structures are a sole proprietorship, partnership, corporation, S corporation, limited liability company. So when you're considering to have a business, you want to consider what type of entity you will be forming. Let's go through the definitions in a bit more detail here. We've got the sole proprietor, an unincorporated business owned by an individual. There's no distinction between the taxpayer and their business. So the sole proprietor is going to be the easiest type of formation that you can have. Most people that just start doing business, if you just start doing business and you start earning revenue for a profit intention, you're typically going to be in the realm of a sole proprietorship. A partnership is an unincorporated business with ownership shared between two or more people. So this is similar to the sole proprietorship, but a partnership then has two or more people. So in a similar situation, if two or more people were to get together and just start doing business, start earning revenue with a business objective, revenue generation objective, then typically the IRS would consider you to be a partnership. However, of course, with a partnership, you want to have a more formal agreement with regards to the partnership to make sure you and the partners are all happy and know what to expect from each other from a partnership type of agreement. And then we have a corporation, also known as a C corporation. It's a separate entity owned by shareholders. So the C corporation, note the keyword separate entity. Most times when you're starting out a new type of business, you're probably going to start out with a sole proprietorship, possibly a partnership. If you do a partnership, you want to be very clear on the terms of the partnership agreement that you're going into with the partner that you're going into with it. Even if it's a family member, you want to be very clear. Put down what the terms of the partnership, what each expects from it, what's going to be the profit sharing type of situation. And then the corporation's not something that you're typically going to do until possibly later. Most type of small businesses may not do this. Obviously, if you're considering starting a new business, you do want to consult a tax professional in order to consider these options. The corporation, however, is an option that most starting businesses won't do because it creates more complication in the number of tax forms that you will need, and because it could result in a situation of double taxation. It's not what they call a flow-through type of entity. It does, however, provide great liability protection and could have benefits with regards to the type of expenses that you can receive with a normal kind of corporation, a C corporation. Then we have an S corporation, a corporation that elects a past corporate income, losses, deductions, and credits through to the shareholders. So this is what some would call a pass-through type of entity. You get some of the benefits, or the idea, the concept is you get some of the benefits of the corporation, but you have the added benefit of not having double taxation given the fact that you have this pass-through type of entity so that the income passes through from the corporation to the shareholder. It's still a bit more complicated to set up, costs more for us to regulate it, costs more to do the taxes. It's another tax return as opposed to a Schedule C, which only has, or a sole proprietorship, which only has an added schedule on the 1040, which is a Schedule C, or everything's added to the 1040. That's the primary schedule, at least, that will be added with regards to the sole proprietorship. The S corporation, you need another return. It's in essence an information turn, at least for the federal side of things. But it's going to be, so it's a bit more complex, but it'll still flow through. It won't be taxed on the corporate level, at least on the federal level, as a separate type of entity for the S corp, because it'll flow through to the owners of the corporation, the S corporation. And then you have a limited liability company, a business structure allowed by state statutes. And this is going to, again, be a kind of flow through type of entity. You want to check the statutes of the states to make sure that you're in compliance with those. And so your main concept here normally is that you're going to be a partnership or a sole proprietorship or a partnership typically when you start, oftentimes, but there's more liability with those two types of entities. If you want to get more liability protection, or you're getting to a point where you think it would be beneficial to have a different form of entity, an incorporation form of entity, many small businesses will typically go to an S corporation or a limited liability company to try to get more of that limited liability, but not have to deal with the problems of a normal C corporation, which involves you having to do double taxation being one of the major problems with a normal type of C corporation. And then possibly the C corporation is, of course, very good with regards to generating equity oftentimes. So that's just a general overview. Obviously, you want to go through and discuss these with more detail with a tax preparer and a lawyer. When you do so, just remember that if you're talking to someone that specializes in creating tax or S corporations and you're planning on creating one with them, their opinion may be somewhat biased there. So just, you may want to go, when you're considering this type of thing, talk to someone that you're not considering forming an S corporation or a limited liability company with, because then you're going to get an objective opinion possibly. So you might want to go to a CPA that's different from the person who's going to set it up and say, hey, I would just like advice on what you think the best type of entity would be. I'd like to pay you just for that advice. I'm not going to set up the entity with you, but I just want to pay you for your advice so that I can get as independent and advice as possible, and then decide whether or not I want to set up an entity, and then go through the process of setting up that entity with whatever choice you want to go from that point forward. Okay, next item, choose a tax year. A tax year is an annual accounting period for keeping records and reporting income and expenses. A new business owner must choose either calendar year, 12 consecutive months beginning January 1st and ending December 31st, or fiscal year, 12 consecutive months ending on the last day of any month except December. So we want to choose a tax year. Oftentimes, of course, for small businesses or sole proprietorship, you'll basically have the year end will be your tax year. It'll coincide with the year end. It'll coincide with your tax preparation. However, many type of companies may benefit from some other type of tax year, and there's multiple reasons. One, it might line up with your natural type of year end, so that you can do the year end kind of stuff at the end, or the slow time of the year. It also helps if you're going to be doing that kind of work when you're not in the busiest time of your year, to have it at some other point in time. And it might also be helpful for your tax preparer as well. You might get more attention if you're doing it at something other than the busiest time of year. So there's some pros and cons to having some different type of year end. It can be a little bit more confusing to have some year end other than December. So typically you would think of December year end as being kind of like the default. And then you would decide if you wanted to deviate from that for one reason or another, possibly because your natural year end would be at some other time. In other words, your year end December might be really busy and may not, again, be the time that you want to add more troubles at that point in time. Okay, so then we apply for an employer identification number. An EIN number, that's the employer identification number, the EIN, is also called a federal identification number. It's used to identify a business. Most businesses need an EIN. So even if you're a sole proprietorship, you're a small business, you probably still want to have an EIN. In other words, when we call it an employer identification number, most people think, well, what if I don't have employees? I don't really need an EIN. Well, the EIN is basically the number that the IRS applies to the business. And even if you're a sole proprietor, the number they apply to your business is your social security number until you apply for an EIN number. You don't really want your social security number to be the number applied to the business, because you're going to have to give that out to other people. Other people that you contract with, even if you're a contractor, are going to need your social security number possibly in order to issue you a 1099, as they're required to do if you don't have an EIN number. If you have an EIN number, then you can give them your EIN number. So even the smallest type of business that doesn't have any employees would probably still want an EIN number so that they can identify to other people their business number if they're required to do so in the case of something like a 1099 or something like that. And therefore, it's you could sign up for the EIN number. And obviously that's the number that the federal government counts you as. So when you're an individual, they think of you as a number. Your number is your social security number. When you have a business, they think of you as a number. That's your EIN number. It's not just for the employees, so you want to keep that in mind. Have all employees complete forms. Form I-9, employment eligibility verification, U.S. citizenship and immigration services. That's a PDF form you can click on here. And of course, Form W-4, employees withholding allowance certificate. Obviously, the Form W-4 is the form that typically you're going to need to have filled out. It's going to give things like the allowances, and that's going to help out with the payroll information, including the number of withholdings. It's also the form where you can basically get their information, including their social security number that you're going to need for payroll, and the address and that kind of stuff. It all comes from the W-4, but it's also going to help to calculate those withholding amounts, which is going to be one of the key components, the difficult components with regards to paying employees. Pay business taxes. The form of business determines what taxes must be paid and how to pay them. Taxpayers interested in starting a business can find information for some industries on the Industries Professions Tax Center's website. Each state has additional requirements for starting and operating a business. Prospective business owners should visit their state's websites for info about state requirements. Now, oftentimes when you think about other types of taxes, you think about things like a business license or things like that. Those things are typically handled oftentimes by the state that you are in, of course, and therefore you want to go to the state regulations and see what you need to do that might be further added in terms of things like other types of taxes and regulations you'd need to comply with in relation to a specific industry and with relation to the state that you're in. So you can take a look at this link for these two links for some information regarding those items. IRS also has more information for small business administrations, 10 steps to start your business. Subscribe to the IRS Tax Tips. So that would be a useful thing to do. A link to this area will be in the description.